Welcome to Trading Nation. I'm Seema Modi. Airline stocks continuing to lose altitude Tuesday amid concerns around fuel shortages tied to this weekend's Colonial Pipeline cyber attack. American Airlines saying Monday it would add stops to 2 of its longer flights to conserve fuel, while Southwest Air has begun flying planes with extra fuel to airports that need it. The U.S. Global Jets ETF down about 8% from its March highs, and jet fuel prices are still on the rise. Is this a temporary pullback or a bigger warning sign for the group? I'm joined by Nancy Tengler of Laffer Tengler Investments, Bill Baruch of Blue Line Capital. Nancy, I'll turn to you. Can you quantify for us how significant this Colonial Pipeline attack is for the airlines?
Thanks, Seema. Yes, I mean, obviously it's going to have a near-term impact, but I would argue that not all airlines are created equal, and Southwest is in a unique position to come out of this stronger. I mean, this is a company that has a strong history in hedging oil prices. Their hedges become profitable at $65 a barrel for crude, so there we are. And then they have another round at 70 to 80. And then in 2022, a really aggressive hedging program. They've announced that they're going to be rehiring or hiring new flight attendants for the first time since before COVID because they expect strong demand. So I think once the pipeline gets back on track, this is a company that you would want to take advantage of the weakness in because it's going to be a strong medium and long-term player. Mostly leisure travel, doesn't need to wait for business travel to come back. We're owners and we would be buyers in here.
Bill, the airlines have been leading this sort of recovery in travel. So do you buy these stocks on weakness?
I think this is ultimately a buying opportunity, but with some selection here. And I first want to say, Nancy made a good point about Southwest Airlines. I'm very bullish on crude oil. I think crude oil can get to $100 over the next 18 months. And I think that's going to be a headwind down the road for airlines. Southwest is very good, very well positioned in that, given their hedges. But I own Spirit Airlines, and I like Spirit Airlines. They've done some really interesting debt reconciliation, some refinancing. They have really good contracts as well. I think those are really good fundamental reasons to like Spirit. But another thing is to point out is this weekend, 1.7 million passengers passed through TSA on Friday and on Sunday. So you're seeing vacation travel pick up. And I think with the stimulus dollars in people's hands, I think you're going to see people swing for one more extra vacation. I mean, especially looking at COVID last year, people are going to get out, people are going to travel. I think Spirit Airlines is going to be well positioned to capitalize in that. But not only that, on a technical basis, I do think that you've seen a good rally out of the hole here in Spirit. There is some good headwinds with the gap from that March fall off, but the $36 area has been very sticky. And although there's a lot of resistance there, it's holding that resistance. It's almost building sort of a flag-like pattern, which I find very bullish. Unlike American Airlines, which has not been able to regain the previous lows for the last 5 years, and it's failing at that resistance. So I'm very hesitant on other airlines outside of Spirit and Southwest. But Southwest, though, it broke out of a trend line. It's really surged out pretty good. I want to wait for a pullback in Southwest and use something closer to $54 to be a buy there in Southwest Airlines.
Nancy, beyond fuel consumption, biggest risk owning airlines?
Well, the cyclicality and the fact that the virus resurges, and of course that is a risk. But every day that we increase vaccinations, that's beneficial to travel. And I think, as Bill rightly pointed out, there is a lot of pent-up demand, not just money, but desire to get out. And in Phoenix, I was at the Phoenix airport the other day, packed, like Christmas packed, where cars are lined up, people are running around everywhere with luggage. It was crazy, and I think the contrast was in Oakland Airport in California, where things were much slower. So there's an uneven return to travel, and we think that's really the opportunity.
Yeah, and that's definitely been a big part of these earnings calls, whether it's airlines or even the online travel operators. Nancy and Bill, thank you for joining me today to discuss airlines.